It's a common fact that most people cannot beat the stock market, and by this they mean you generally cannot pick stocks that perform better than what the S&P 500 returns, which is the main US index. However, as someone who's been quite immersed into the finance scene for years, I can tell you for a fact that it's entirely possible to beat the market, and in this video today, I'll show you proof and some stocks I am personally invested in. So there are 3 different brokerages I'm going to show you here. First, my Webull account, used for more medium-term swing trading. Second, eToro, used for more short-term swing trading. And third, Vanguard, which is a longer-term account that I have. So for Webull, we can see that I've put a year-to-date filter on, which is basically how the portfolio has performed over the year. You can see in yellow the returns of the S&P 500 over the year, and in green is my Webull portfolio. My Webull account is up 22.5% over 2025, and the S&P 500 is up 12.5% over the year. So I've currently got more than a 10% lead on the S&P 500. Not bad. So what stocks do I have inside this account? Well, since it's a medium-term swing trading account, whatever I mention now may not even be in my portfolio within a month. But a few examples I am looking at increasing my exposure to are SPMO, WPM, and HL, to name a few. The last time I mentioned stocks in a YouTube video, I was pretty heavy on oil and cannabis stocks. Well, I have barely any of that in my portfolio now. The issue with making videos on your stock picks is that information changes fast. In fact, within a couple of weeks of making that other video, I totally abandoned the oil trade. And a few months after that, I abandoned the cannabis trade. So who knows what I'll have in my portfolio in the coming months. But I do like silver miners and other AI stocks for the foreseeable future, such as Lemonade. I'm sure Nvidia will continue to rally, but I see better potential bang for my buck elsewhere. So that's my Webull account, beating the market. Next account, eToro, my shorter-term swing trading account. So over the past 6 months, my account here is up 28.5%, and the S&P 500 is up about 17.5%. Another instance where I'm up about 10% on the market. Now, as mentioned, this is more so for short-term plays such as earnings. I haven't really played earnings much lately. If you're a newbie here, I have a lot on my plate in the game of life. Recently, I moved into my new house and picked up a lot of extra shifts at my second job. Basically, what that means is I have less time to look into the markets much, whether that be for short, medium, or long-term stock plays. So I've left a lot of opportunities on the table this year due to being busy with other parts of my life. And in prior years too, with being busy with my CPA studies, which are now thankfully complete. Not sure if my account would be up or down more if I'd gambled a bit more on earnings. I'd imagine it'd be up more since if I'd paid more attention to the markets, I would have had better opportunities. But either way, I've only played 3 recent earnings. 2 of them bombed, but the one winning trade won big time. AI-related companies flunked, but American Eagle rocketed. Thanks, Sydney Sweeney. Big tits are better than AI, it seems. This is one interesting factor to consider when doing certain types of stock trading. You can only lose 100% of your investment, but your upside is theoretically unlimited, as we can see here. My stop losses triggered close to 50 to 60%, but I won almost 200% on the other trade. Now, these obviously aren't the only trades. I have some others open currently. However, there is no leverage with those, so I just happen to like these stocks for the shorter term, and well, based on my indicators, these stocks still have more room to run. But either way, point is, yet another one of my portfolios that is beating the market. Now, last portfolio, my Vanguard account, this only exists because it's a cheap way to invest in VHY, which is a dividend-heavy ETF here in Australia. I like Aussie dividends because we have franking credits here, which is like a tax benefit of sorts, as opposed to like investing in stocks using your after-tax income only to have the dividends you received get taxed again. So here you can see this is up 30%, and I only invested in this earlier this year. Now, admittedly, I'm a bit confused with this since if you look at VHY, even at the very bottom of the Liberation Day sell-off, it's still only up 19% from that time. I did invest near the bottom since I saw a good opportunity after the market had a tariff tantrum, but my guess is that I've had some dividend payments flow in, but even so, I doubt that the dividends make up the extra 12%, especially since the dividend yield is about 8%, and that's for a full year, not several months. But either way, we have another account that is beating out the market. So those are just some examples of beating the market. A counter argument that likely comes my way now is, well, it's only a small sample size, which is correct. Have I beaten the market over 10 years? No. Why? Because 10 years ago, I didn't even know what a call option was. So who's to say that I don't underperform the market in the coming years? Valid criticism. However, I'm confident my outperformance will continue, since I've gotten a decent handle on the markets, and I'll only continue to get better. Without sounding arrogant or smug, it's as simple as picking a handful of stocks that perform better than the S&P 500, which can be anywhere between 10 to 20%, and you minimize/cut out stocks that underperform this. Sounds like Captain Obvious stuff, but for example, my Robinhood trade is up 41% currently, XOVR is up 15%, and HL is up almost 27%. I could basically just have these 3 stocks for the year, and GG. And even then, I can just switch in and out of underperforming stocks and rotate into stocks with better upside. But either way, that's my current stock portfolio and how it's been in the market. It is most certainly possible, and I'll only continue to get better as the years go on. How's your portfolio doing so far this year? Let me know in the comments. Thanks for watching. That is all.